Hey everyone, welcome back to our channel. Have you ever wondered what makes the world's top investors so successful? Today, we're diving into Warren Buffett's investment secrets, and we found something incredible. Can you believe that one stock makes up about half of Buffett's $364 billion portfolio? Yes, you heard that right. Let's uncover which stock is so valuable to Buffett. Buckle up. The power of Apple's brand. When Buffett first invested in this stock in 2016, he saw an amazing opportunity. The stock? None other than Apple, the tech giant. Apple isn't just a company. It's a symbol of elegance and innovation with its iPhones and MacBooks. People love the Apple brand, and it's made a ton of money. In 2015, Apple had a 39% gross margin and 30% operating profit, which is incredible. Apple's unmatched brand strength is what sets it apart. It's more than just a business, it's a cultural phenomenon. Apple's devices are beloved worldwide, and the company's brand has an enduring appeal. This brand strength translates to customer loyalty and a consistent demand for Apple products. But it's not just the devices that make Apple special. It's the ecosystem they've created. From the App Store to Apple Music and Apple TV+, Apple services are a significant part of its business model, adding another layer of revenue and customer engagement. Stephanie Link's insights. Next, we've got some insights from Stephanie Link. She has some interesting points about this tech powerhouse that you won't want to miss. Stephanie will dive deeper into why Apple remains a dominant force and what this means for investors. Understanding the deeper value drivers and competitive advantages that experts like Stephanie highlight can provide a clearer picture of why Apple is a favored investment. Economic indicators and market news. And don't worry, we'll also break down the latest Consumer Price Index, CPI, data and what it means for the Federal Reserve. The CPI is a crucial economic indicator that measures inflation and impacts interest rate decisions. Understanding these economic indicators is crucial for making informed investment decisions. Higher inflation can lead to higher interest rates, which can impact stock prices and economic growth. Recent market developments. Let's get into some recent market news. Josh Brown is making waves with eBay, supporting it as it hits its highest point since April 2022. This surge in eBay stock is noteworthy, and we'll explore what's driving this momentum. Factors such as increased e-commerce activity, strategic partnerships, and new revenue streams can contribute to such stock movements. Additionally, NASDAQ is making big moves in software and financial services. It's showing strength and could be set for a big comeback. NASDAQ's shift into these areas represents a strategic evolution that could lead to substantial growth. This diversification helps NASDAQ reduce dependency on traditional trading revenues and tap into high-growth areas. Then, there's Richard Ellis, CBR. Despite concerns about commercial real estate, CBR is shifting its focus to software and services and seeing a breakout. This shift indicates a significant change in strategy, allowing CBR to capitalize on the current market dynamics. The real estate market is evolving, and companies like CBR are adapting by leveraging technology and expanding service offerings. Oracle is also gaining attention with strong chart performance and leading the S&P. Oracle's focus on cloud computing and AI has positioned it well for future growth, making it a stock worth watching. These technologies are critical for businesses looking to scale efficiently and innovate rapidly. Apple's financial performance. Back to Buffett and Apple. He loves companies with strong financials, and Apple fits that bill perfectly. When Buffett bought Apple in 2016, its price-to-earnings (PE) ratio was a low 10.6, making it a great buy. Fast forward, and Apple has proven to be a winning investment. The company's solid financial performance and consistent innovation have justified Buffett's confidence. Apple's financial performance has been stellar over the years. The company's revenue jumped from $156 billion in 2012 to $366 billion in 2021. This growth is a testament to Apple's ability to innovate and capture market share. The iPhone, in particular, has been a massive success, generating significant revenue and driving Apple's profitability. Apple's services boom. Apple services like Apple Music and Apple TV+ are booming, with over 825 million paid subscribers and $19.8 billion in revenue last quarter. This could push Apple's stock higher. The services division is a high-margin segment, contributing significantly to Apple's profitability. It also provides a steady and recurring revenue stream, which is highly valued by investors. Apple's ecosystem is a major driver of its services revenue. The App Store, for instance, is a vital platform for app developers and consumers alike. Apple takes a cut from every transaction made on the App Store, generating substantial revenue. Additionally, services like iCloud and AppleCare add to the company's revenue streams, enhancing the overall value proposition of Apple's ecosystem. Supply chain challenges. However, supply chain issues are a challenge, with potential revenue losses of $4 to $8 billion this quarter. These issues highlight the importance of global supply chains and the impact of disruptions on major companies. Factors such as chip shortages, shipping delays, and geopolitical tensions can significantly impact Apple's ability to meet demand. Apple has been proactive in managing these challenges. The company has diversified its supplier base and invested in securing key components to mitigate supply chain risks. However, the global nature of supply chains means that some disruptions are beyond Apple's control. The ongoing chip shortage, for example, has affected many industries, and Apple is not immune to these pressures. Valuation concerns. Considering Apple's high valuation, its future growth might not be as bright as before. The Motley Fool Stock Advisor team recently left Apple off their list of the top 10 stocks to buy now. These 10 stocks could offer huge profits, so it might be worth checking them out before going all in on Apple. Diversification is key to a robust investment strategy, and exploring other high-potential stocks can provide better growth opportunities. The Motley Fool Stock Advisor. So, what is Motley Fool Stock Advisor? It's a service that offers expert advice on building a solid portfolio and has more than tripled the S&P 500's return since 2002. The Stock Advisor provides regular updates and recommendations from top analysts, helping investors make informed decisions and maximize returns. With its proven track record, the service is a valuable resource for both new and experienced investors. The Motley Fool Stock Advisor is known for its long-term investment approach, focusing on companies with strong fundamentals and growth potential. The service offers detailed analysis and insights, making it easier for investors to identify promising opportunities. By following the recommendations of the Stock Advisor, investors can build a diversified portfolio that is well-positioned for future growth. That's it for today. If you found this video helpful, don't forget to like and subscribe for more updates on stocks and investments. We aim to provide you with the latest insights and strategies to help you navigate the complex world of investing. Who knows? The next big winner might be right in front of you. See you next time.